All right. All right. One of the things that I like to look at with the charts is where we are, right? So if you're really zoomed in, this looks like we are in a downtrend. Looks like we are in a downtrend, right? We sweep liquidity, we're in a downtrend. But if you zoom out, you start getting a better picture of us being in an uptrend, right? Hourly, 4 hourly. And what we're doing is the charts, uncoupling the charts. Okay. So this is MNQ, but this since it's a specific contract, you start seeing that it didn't really exist back here. But if you want to take a look at NQ, the more we zoom out, the more we see that we are in an uptrend. This is the daily, this is the weekly. Okay. So 2021 to 2022, that's when we really pulled back more than usual. You can see the price is just riding up, and then we had a really bad pullback, mainly because of, whatever reason, COVID, um, the market. But what we do establish though is that we finally swept this liquidity and we're pushing up. So just like how it looks like on the weekly, is how you're supposed to interpret it in the smaller time frames, right? We look for, if we are in an uptrend, we look for liquidity sweeps, bounces on some type of support resistance levels that you may have in order to continue the trend. Okay, so, but let's go back to MNQ. So one of the things I think is important is that every week, what I like to do is establish the weekly open. I think that's a very significant level. So since we have the weekly right here, first thing I want to do is mark out the weekly open. This is it's here. Well, weekly open. All right. So every week has 5 trading days. First one's like this, boom. And inside of this now, I like to look for bigger time frames for us to bounce if we do retrace, right? We did sweep liquidity right here slightly. And then we came down, okay? But if we do come down, how far can we come down? That's really up to what support and resistance levels you have for yourself. For me, I like to do fair value gaps, even on the daily. So let's just mark this out in blue. Let's do bullish fair value gap. And we'll mark out a midline. Okay. So price comes down. Boom. Okay, this is the next day. We are below the weekly open. This is where we open, red candle. This is where we closed on Monday, Tuesday. We we seem to be bouncing off this fair value gap, daily fair value gap. So the bigger the support and resistance levels you draw out, or the support and resistance you draw out on the bigger time frames, hold a little bit more in terms of the trend, right? So if we hold here and we start coming up on the hourly, 5 minutes, 1 minute, we're looking for what higher lows or any other smaller fair value gaps on smaller time frames, or blocks, or whatever you use in order to change price direction. We look for that to happen on the smaller time frame to take us back up to continue this bigger time frame trend. Okay, so let's take a look. This is Tuesday, Wednesday. Now let's just take a look how it looks like on a smaller time frame. Okay, so what time is this? 1 p.m. Let's take us to market open at 6:30 Pacific time. So, And within this hour, what we're seeing is that we're establishing liquidity both up and down. Okay, we failed to take this out, but we did bounce off. We still held above 50% of this daily fair value gap, which is showing it's bullish. So what I look for here is to see what happens when market opens. 4, 5, 6. 6. Okay. Now we go to smaller time frame to try to capture market open. So market opens here. Remember, looking at the bigger time frame, where is the trend? The trend is up, right? And since we have this weekly open, we are, sweeping liquidity right here. This is what I was talking about in the smaller time frame liquidity sweeps in order to help you push price in the direction that you want it to go. Okay. Sweep. We have this high, this high, this high. We take it out. But if price does come down, I'm not gonna just think shorts right away, right? If price does come down, potentially here might be an area for us to come back down to and hold. And if we hold here, then I'll look for adding to longs if I'm not in a position. But if you're right here and price is right here, I'm assuming that price comes up to here or to take out this liquidity at the very high, right? The buy side liquidity, which is, we had a sweep right here. Oops. We had a sweep right here. But since we are in an uptrend, we're not gonna think that just because we swept, now we're gonna change directions, just like we swept right here, we're changing directions. No, we're just looking for an opportunity to continue the trend. So if we do come up, I'll be looking for us to take out weekly, and then this is buy side liquidity. Okay, buy side liquidity. So let's see what happens. But I do think that from right here, right, you could see that smaller time frame fair value gaps are being respected as well. We have this fair value gap right here. It's being respected as well. So this, when you see all of these fair value gaps or support zones or support and resistance lines that you have being respected, then that means that this trend is still in an uptrend. Okay, so let's see what happens. All right, and price eventually goes and takes out liquidity. So this is the type of actions you'll be looking for in your trading, and not trying to get fooled by these types of rejections, because when we have a break of this high, price is just looking to return to retest, right? So you ever hear about a break and a retest? Not a break in, because on a smaller time frame, let's say you're on the 1 minute zoomed in, like right here, or was that? Right. On a 1 minute, this is a change of break of structure, right? To the downside, market structure shift after we swept liquidity, which was the weekly, and we came down respecting bearish fair value gaps. So you can still play puts or shorts in a bullish market, but you have to understand that if you are, wanting to trade with the trend and not, take out the guessing, then what you do is look for entries down here, or you can scalp up here, but the higher probability is to wait for some type of retracement in order for you to get into your position, right? So we had a low right here, break this high, come all the way up. So some people may use it right here for Fibonacci for a retracement. As long as we're below 50%, let's try to see if we can even go even lower right here. As long as we're below 50%, even lower. Let's see if it even goes all the way down here. This is the last low before last break of structure. You can see we even tapped into 50%, right? So this is usually where you would want to look for long opportunities. So, and then once we make that sweep then we can have a short-term short bias because the objective is complete. We are at all-time highs. We sweep the highs, and now we have a lot of liquidity below for us to kind of look for entering shorts. So let's see how this plays out. We come back up. We are respecting bearish fair value gaps after we sweep liquidity. Right here, respecting it. First target would be right here. And we go take it. Then we look for the next targets. Do we have more liquidity to take out? Right here. There we go. We tap that one in. Looks like, do we have one more maybe we can take out? I don't know what time this is. This is Friday with still a lot of time left, right? So let's see if we could take this one out, right? So as as the candles are growing, these are the types of things that I'm looking for in order to get some entries. So until we take out this high, then I'm looking really for shorts. And once we do take out the highs or and vice versa, right? So if we're in a downtrend, I would want us to come down, come up, take out the highs, and then look for opportunities to get back into shorts. Okay, so let's see if I just flip this chart upside down. This is the same thing, right? We're looking for this liquidity sweep. We had a high or a low right here. We sweep the liquidity. All the objective is complete, and then where else can we go, right? We can go up, unless if we just keep making all-time highs or all-time lows in this case, then it's best to just let the candles go up and down and create liquidity so you can have targets to go for. But since we came back up, then we know that we have this liquidity. So right here, same thing. Going back to the downtrend. We have this. We still have some time left on the day. Let's see if we can go take it out. We are respecting bearish fair value gaps. Right here, we had this over here, but it's very small. We're not in discount, so this is not really an entry for shorts. But let's see if we come down and take out this liquidity, and then on this bigger time frame, fair value gap. So let's see what happens. Come on. So we're just building liquidity. That's what I'm talking about, right? Building liquidity and hitting that fair value gap, right? So just want to debrief this, right? Because we are in an uptrend, we look for support resistance for us to continue up. We are not really going for breakouts. They're just lower probability in terms of, holding your contracts and having the proper risk management is better for you to let price come back down. So daily, 4 hour, 1 hour, 30 minutes. Okay, let's see. 15-minute fair value gap right here. We're bouncing. We have actionable signals. Let's check the RSI. So let's see what happens here. All right, we don't just long right here because remember the objective is complete. So what you want to do here is just let the candles just dance around a little bit. And if you have time, then that'll let you know that there's a trade. If you're running out of time and then you're unsure of where the price is going to go, it could just keep bleeding down or it could just keep pump all the way up. It's your job to just sit on your hands and wait for a clear opportunity to enter the trade. Okay, so let's see. Let's go back to the 5 minutes. All right, we have a little 2-2 reversal Morningstar. If you guys trade the strat, we got the 2-2 Morningstar reversal, and a divergence in the RSI. Right, we have here is lower. Actually, no, this is higher. Higher. No, no divergence. Thought it was. Let's take a look. All right, we're holding this fair value gap. Holding this fair value gap. Let's see where price goes. See, this is what I'm talking about in terms of dancing around, letting it build, because you can't just long here, you can't just short here because we could bleed. There's no reason why price has to go in a certain direction. Yeah. Okay, we have this fair value gap right here, 5 minutes. I'm just drawing them along as you're looking at the charts. Okay, so we're gonna break out of it. Let's see what happens. Now we're breaking and retesting. Nope. And that's why it's important. Oh, that was the end of the day. All right, so that's why once targets are met, you can look to do a mean reversion where you play that reversal in a bigger time frame uptrend, or you look for reasons to get you to take out the liquidity. So there's just two things that I look for in the day, and it starts with it starts with the weekly chart. Okay, uptrend, and I will be bearish until we really break this low, right? So if we break this low like this, and even this low right here, which is it's a long way to go, but if I'm really starting to look for shorts, it would at least need a break here, dance around a little bit, sweep this high, and then come down. But we really have to have a really big break of a support level, right? This is the daily fair value gap. We have to really rip below it, dance a little bit, we sweep the liquidity, and now we're staying below here. Okay, that's the only way I'll be looking for shorts. But till then, we'll be looking for longs. Okay, so is this how we ended? We ended with a red two up. Okay, a red two up. So let's let more candles kind of build throughout the week in order to have your bias. You don't have to trade every day, especially if you have a job or something else to do. It's always good to just observe the market, learn as much as you can, and when you see a opportunity, you can really capitalize making less trades than more trades, right? So let's take a look at what is going on. We had this fair value gap bounce, but like I said, we swept liquidity. We came up, now we swept the bigger time frame liquidity, right? Bigger time frame liquidity, and we swept this one as well. So just as we saw earlier, like right here, where we're dancing around a little bit, we're holding this fair value gap. We'll let the overnight session create more and let us know if we want to go higher or lower. So what I'll be looking for is us to maybe come back up like this, respect some of the other fair value gaps, and potentially come back down, right? So we don't know what really is going to happen, but we left a lot of imbalances above, and we are holding this bullish imbalance. The futures market opens in about 30 minutes, so that will give us a clear direction. But like I said, if we're looking for shorts, this is that daily fair value gap. If we're really looking for shorts, until this is really broken, not this deep. Until this big zone is broken, which for me it's 1830, then it's not 1830. It really has to come down to like 1874, right? Just down here, around here. Okay, because that means we have liquidity to go look for targeting on the way down. But till then, right, we are accumulating some sell side liquidity right here, but trend lines aren't just broken, right? Trend lines are continuing the trend. So if we have a trend line here, I'm going to assume that we hold. And as of now, we are holding. So I think it's always good to just not try to overcomplicate things. And just wait for a good setup. Okay, so I wanted to share a bigger time frame and how to create your bias for the week. Okay, so like I said, right now we don't have a weekly bias because we had a red two up. Last time we had a red two up, we kind of chopped a lot, came and swept this and pushed up. Right. Last time we had a red two up right here, but we swept here. We had a red two up, right? Because, or actually, this is a red three down. Apologies. This is a red three down. So we don't get too many red two ups, but the last time, oh, this is a three. Okay. We don't really get too many red two ups, but we did get one this week. So that's why you got to be extra patient going into the week. And this is the weekly open. So once we open, I think in 30 minutes, actually, then the new weekly candle will start, and that's where I will place the weekly open level, and I want to see if we are pushing towards it or away from it. So we open like down here. Oops. If we open down here and we are a candle, what typically likes to happen is that we create wicks, right? So if we're going to push up or down, it has to go the opposite way. So this is where we open, right here. And we're looking, let's say we're looking for a 2-2 reversal, right? Because we took out the highs. And now for the strat, if we are below 50% of this, then we are looking for us to kind of push up like this. And that would probably create a little, I don't know if I can do that with this thing. Do I have a marker? Let's just do this. Okay. All right, so this would be for price to come up. If we're looking for it to come down, right? If we're looking for it to come down, then it would do this. And it would be green at this point in time. It would be green. And then that green would turn into a red once we push down. So this would be like this. If we're looking for that 2-2 reversal in the strat. But even the 3-month, right? So like if you look at this candle right here, this is bullish. This is bullish. This is bullish. We had a red 2 up on the 3 months, but 3 months is a little bit different because there's not too many candles. We had a red 2 up, and then we had a green 3 up. So if you're looking at this, you won't really be looking to just go short. Okay, monthly actually, we are on March 10th. So March 10th, we still have, it's barely halfway. So this could just, right? We could dig a little bit deeper and then just continue up, right? Just like how we have been in the last couple months. It's green, 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 right? Until we break all the way down here, we're just going to be looking for longs, right? Just like how I showed earlier, we come down, scares people out, and then we closed above 50% right here. All right, same thing. There's a wick. There's always a little wick, even if it's tiny. But if it's not, I think it's called a Marabuzu. I'm not sure. But there's always some type of little wick right there. You can see that. So we got a red right now. So we're going to look for us to get above wherever the weekly open is. So when we're below the weekly open, that's a great opportunity for us to get into a discount support to take us back above the weekly open, right? So if you're right here and you're looking for longs, you're looking for price to come down here, create a wick. And that's where somewhere in here, you want to be going long because we opened right here, went down. And once we come back up, where's our first target? Our first target is to take out this high in order for it to become a 2, right? Directional bar, 2. It could be a 2 up or 2 down. The 2 only signifies that we are breaking one side. And 3 signifies that we're breaking both sides. Breaks both is down, breaks up. But this one only broke above here, so it's only a 2. Okay, so the next one will probably open as a 1, and our goal is to find a way for us to hold support in order to make this another 2 up. 2 up, 2 up, 2 up, 2 up, 2 up. Okay, so we have all this liquidity down here. All this liquidity down here. So if we do come down, look at this. This is a 3-1. I think this is called a Momo shooter if you're a strat trader, right? Sweep liquidity, a 3, take out both this high and this low. 1 with a huge selling wick right here. So wherever we open, if we come up right here, I'm anticipating us to come right back down, take out at least here. So anything open up here I'm looking for us to have another wick to push us down, take out here. And if we want to continue the uptrend in a healthy way, what I would like for us to do, right, come up a little higher, and then we sweep this liquidity, sweep this liquidity, sweep this liquidity, and this one never took this one. So we can come down here, dig a little deeper, and take us back to continue the trend, okay? So instead of looking for shorts and trying to hold it and thinking that we're gonna reverse, which we potentially could, this is the another way of thinking of if your style is, if you're having trouble with your entries and anticipating the trend. We do still have this fair value gap down here, so we could even dig a little bit lower. And this is the 4-hour. I like to do usually things on the hour daily, but if you could use any time frame. This holding would be the last stand for us to continue that bullish trend, right? This 4-hour is broken. And then we come back up here, then this we might actually get something like this, okay? But I don't know the answers. No one knows where we're gonna go, right? And there's always some type of news too that's gonna influence it. You just have to be ready to be able to play both sides, but understanding that to continue to play the uptrend is the safer way to go. Okay. So that's it for me today. I hope you guys learned something. I'll post this. And I have a new channel on the Discord. I usually just post my ideas and thoughts and I get your reactions through emojis, but now I have the chat with BW section. So if you guys want to share your charts, ask questions, we're always here to learn together. So feel free to message me on the chat with BW. You can even at me, and I'll do my best to try to get back to you right away. So have a good week in trading. Good luck. And yeah, have a good day.